Before we begin, viewer discretion is strongly advised. The following is for educational and entertainment purposes only. This is the verbatim federal courtroom testimony of the Sean Diddy Combs trial, as reported by reliable sources. What caused Sean Diddy Combs to visibly panic in the courtroom today? Why did his longtime financial advisor turn against him after 15 years of managing his vast empire? And how could the intricate web of offshore accounts and suspicious wire transfers that Thomas Winters just exposed become the financial smoking gun that prosecutors have been searching for? In a stunning development that has sent shockwaves through both the entertainment and financial worlds, Thomas Winters, who served as Diddy's chief financial advisor and accountant from 2008 until late 2023, has taken the stand with thousands of pages of financial records that prosecutors are calling the money trail that connects everything. For over a decade and a half, Winters was the architect behind Diddy's complex financial structure, managing everything from legitimate business ventures to what he now alleges was a sophisticated system designed to conceal improper payments and potential evidence. He didn't appear as a disgruntled employee seeking revenge. He didn't come as part of a plea deal to save himself. Winters arrived as a financial professional who had reached an ethical breaking point, carrying with him meticulously organized documentation of transactions that directly correspond to dates and events central to the prosecution's timeline. "I built my career on financial discretion and loyalty to clients," Winters stated, his professional demeanor unwavering despite the gravity of his testimony. "But there's a critical line between client confidentiality and participating in what I came to recognize as a pattern of financial transactions designed to silence victims and conceal evidence. The decision to preserve documentation and eventually testify wasn't made impulsively." According to sources close to the case, Winters began quietly documenting concerning financial patterns in 2018 when he noticed recurring payments that correlated with alleged incidents. As allegations against Diddy mounted and other witnesses came forward, Winters contacted federal investigators with information about a financial system that he had helped create, but had grown increasingly concerned about a system that he now characterizes as designed to ensure compliance through financial control and coercion. If you're finding this information valuable, please take a moment to like this video and subscribe to our channel for more breaking developments in this ongoing case. The federal courtroom atmosphere was charged with tension as Thomas Winters was sworn in. The overhead lights seemed to highlight his impeccable appearance, tailored suit, precise Windsor knot, and the composed demeanor of someone accustomed to high-stakes financial meetings. Diddy, seated at the defense table, maintained his typical composed expression, though alert observers noticed his hand tightening around a pen as Winters approached the witness stand. Nobody expected financial testimony to become the day's focal point. The room was tense, eyes focused on the witness stand until Winters placed a sleek laptop and several external hard drives on the table beside him. Gasps echoed through the gallery. Even the judge leaned forward with increased interest. No announcement, no dramatic declaration. Just Winters calmly explaining that the devices contained comprehensive financial records spanning 15 years, with particular emphasis on certain recurring payment patterns that correlate with dates of alleged incidents. Until that moment, Winters had been one of Diddy's most trusted advisors, a behind-the-scenes architect of his financial empire. But something had changed. Maybe it was the mounting testimony from victims. Maybe it was the realization that financial records he had managed could corroborate their accounts. Maybe it was his growing ethical concerns about the patterns he had documented. Whatever it was, Winters was done keeping the financial machinery behind Diddy's empire confidential. He wasn't taking the stand as a celebrity associate. He wasn't there for publicity. He was there as a financial professional who had managed complex accounts and eventually recognized concerning patterns in how money flowed to silence accusations and create dependency. And when he began to speak, the courtroom wasn't prepared for the methodical, detailed financial narrative that connected directly to the timeline of alleged behavior, because what Winters revealed about the offshore accounts, shell companies, and carefully structured payments wasn't just complex financial maneuvering. It was a documented paper trail that prosecutors alleged showed consciousness of guilt, intent to silence victims, and a systematic approach to using financial leverage as both carrot and stick. It started like any other day of the trial. The room buzzed with low conversations. The press hunched in their designated rows. Lawyers whispered strategies as they waited for what was listed simply as financial witness on the docket. But when the bailiff announced Thomas Winters, the room changed. You could hear a pin drop. Some people recognized the name immediately. From business publications, others wondered about his relevance. But the way Winters walked confidently to the stand, his expression professionally composed, yet resolute, told everyone this wasn't going to be routine testimony. The judge raised an eyebrow. Diddy, who had been projecting confidence throughout the proceedings, suddenly sat up straighter, his attention laser-focused on his former financial advisor. Winters took the oath. No eye contact with the defense table. He didn't even glance in Diddy's direction. I understand the significance of financial documentation in these proceedings. Winters began. I served as Mr. Combs' chief financial advisor from 2008 until November 2023. I was responsible for managing his personal finances, business ventures, investments, and the overall financial structure of his various enterprises. The judge allowed him to continue, and from that moment on, the entire trial shifted. Because what Winters was about to say wasn't speculation. It wasn't hearsay. It was financial documentation that created a precise timeline connecting money to alleged criminal activity. When asked to explain his role, Winters provided unexpected insight into the financial machinery behind Diddy's empire. My official title was Chief Financial Advisor, but in practice, I oversaw a team of 23 financial professionals, including accountants, investment managers, tax specialists, and compliance officers. I had signing authority on over 40 accounts across 12 financial institutions. I established and maintained the corporate structure for approximately 30 entities spanning multiple jurisdictions, including the Cayman Islands, Switzerland, Singapore, and Luxembourg. The prosecutor approached strategically. Mr. Winters, can you tell us what prompted you to leave your position after 15 years, and why you've chosen to testify today? Winters looked directly at the I've spent my career managing complex financial structures for high-net-worth individuals. Winters continued. I understand the difference between legitimate tax planning and financial activity designed to conceal potentially problematic payments. He turned slightly toward the jury, his professional demeanor unwavering. What I observed went beyond standard wealth management practice. Winters told the courtroom that it started like many concerning financial patterns with structures that seemed to have legitimate business purposes. It came through seemingly routine financial management. The way he explained it, it was supposed to be standard celebrity wealth management, normal asset protection, and tax planning. I'd been brought in for my expertise with entertainment industry finances, so I didn't immediately question the increasingly complex structure we were building. But the moment Winters began noticing consistent patterns in how certain types of payments were handled, he became increasingly concerned. The overall financial structure included standard elements that would be familiar to any individual, investment entities, licensing companies, intellectual property holding companies. The red flags emerged in a separate structure that operated parallel to the legitimate business operations. This secondary structure included a network of shell companies with nominee directors, offshore accounts with specific routing protocols, and a systematic approach to what internal documentation referred to as PR management payments. The second, I raised questions about the necessity of this parallel structure. I was told it was for privacy management and litigation risk mitigation. That should have been the first red flag. They said it was for protecting assets from frivolous lawsuits, which is legitimate. But it felt like something else, like a system designed specifically to route certain types of payments through channels that would be difficult to trace. He was responsible for the entire financial architecture. The work environment became increasingly compartmentalized. There were explicit instructions about which team members could access certain accounts and transaction records. It felt like information was being deliberately siloed to prevent anyone from seeing the complete picture. Winters said that after approximately 3 years in his position, he began noticing disturbing patterns. It happened most noticeably following what internal communications referred to as management situations. I would receive urgent instructions to process wire transfers to previously dormant entities, often followed by the creation of new shell companies. When he inquired about the nature of these transactions for proper accounting classification, he was told they were talent management expenses or brand protection costs. Eventually, he was instructed to classify these simply as executive discretionary expenditures with no further documentation required. The courtroom remained silent as Winters opened his laptop and projected a spreadsheet onto the courtroom screens. I began tracking these payments privately. Dates, amounts, routing pathways, and eventual recipients were traceable. Over time, I noticed these payments followed a distinct pattern. He displayed a timeline covering 2010 to 2023. You'll note significant clusters of payments following specific dates. For example, on March 17, 2016, there was an alleged incident involving a female artist at Mr. Combs' Miami residence. Within 48 hours, there were 7 wire transfers totaling $1.8 million, routed through 3 different jurisdictions before reaching what appeared to be a law firm's client trust account. 2 days later, a new NDA was executed, which I was asked to fund from a separate account designated for talent contract management. Winters paused, maintaining his professional composure. As a financial professional, I'm trained to recognize patterns. This wasn't isolated. This was systematic. He continued displaying financial records that documented a consistent methodology and usual payment patterns following alleged incidents. The creation of new corporate entities immediately after significant payments, and most concerning, what appeared to be regular payments to the same recipients that would suddenly cease if the individuals made any public statements about Diddy. The most significant revelation came when Winters displayed records from 2018 to 2022. During this period, I identified 37 instances where substantial payments were made to individuals following events that have now been described in witness testimony. In each case, the payment structure was nearly identical. Initial large payment routed through multiple jurisdictions, followed by smaller, regular payments that continued until specific conditions were met or violated. The total amount dispensed through this system during his tenure exceeded $240 million. Winters said he continued documenting these patterns while maintaining his professional responsibilities, realizing that direct questions would likely result in his replacement. Instead, what he uncovered through careful forensic accounting revealed a sophisticated system of financial control and surveillance. There were detailed protocols for handling what internal documents called priority management situations, some involving immediate cash payments delivered by security personnel, some routed through elaborate offshore structures. There were others designated as conditional support arrangements that required regular verification of compliance with what appeared to be non-disclosure terms. He paused, maintaining his professional demeanor while organizing his next exhibits. I began to recognize that these weren't just isolated financial transactions. This was a system of financial control. Winters continued, his voice steady and methodical. After identifying these patterns, I conducted a forensic analysis correlating payment dates with public events and internal communications. There was a consistent sequence: incident, urgent payment, authorization, legal documentation, then ongoing smaller payments that appeared conditional on continued silence. He thought it might be coincidental until he received a directive in 2019. That removed any doubt. It was an email thread discussing a PR vulnerability that needed financial management. The communications explicitly discussed using the payment structure to ensure continued compliance. The email contained a spreadsheet tracking individuals who had received payments, with color coding indicating their reliability status. Those marked in green continued to receive regular payments. Those in yellow had payments paused pending compliance verification. Those in red had payments terminated with notes indicating breach of terms or requiring additional management measures. Winters testified that this documentation transformed his understanding of the finance. Winters paused, glanced at the jury, and continued with his methodical presentation. It wasn't just the payment patterns, those were just the most visible aspect. From that point forward, he began a comprehensive forensic analysis of the entire financial structure. He explained that his concerns escalated with specific instructions. He received in new offshore structures with increasingly obscure beneficial ownership. When I raised questions about compliance with international banking regulations, things would shift in my authority. I'd express concerns about potential financial regulations on Monday, and by Thursday, I'd find certain accounts moved under different signatories or new entities created outside my direct oversight. He said, this didn't happen once or twice. It became a recognizable pattern. The system didn't require explicit directives about silencing people. The financial structure itself accomplished that goal. Regular payments created dependency. Sudden termination of those payments sent clear messages. The offshore structure provided both distance and deniability while maintaining effective control over people's financial stability and, consequently, their silence. Winters' voice remained steady but took on increased resolve. I maintained my position for several years after identifying these patterns. I convinced myself that I was simply performing standard financial management. But then the patterns became impossible to ignore, particularly as allegations began to surface publicly. His perspective evolved gradually as he conducted deeper forensic analysis. Then I began cross-referencing payment recipients with individuals mentioned in sealed legal settlements. The correlation was nearly perfect. Every person who had received a settlement also appeared in the conditional payment tracking system, with regular monitoring of their compliance with non-disclosure terms. He described feeling a growing ethical conflict. I realized that the financial system I had helped build and maintain wasn't just managing wealth. It was potentially enabling a pattern of behavior by providing both the means to silence people and the financial monitoring to ensure that silence continued. Winters said he spent months reviewing all the documentation he had preserved: the transaction records, the communication patterns, the correlation with alleged incidents and subsequent legal settlements. It became increasingly clear that this wasn't standard financial management but rather a sophisticated system with a specific purpose to use financial means to ensure silence and compliance. He said the breaking point wasn't fear but professional ethics. I realized that continuing in my role made me potentially complicit in financial activities that appeared designed specifically to silence victims and conceal evidence of potential crimes. He told the court he resigned in November 2023 after securing copies of relevant financial records. I submitted my resignation citing irreconcilable professional ethical concerns. I declined the substantial financial incentives offered. To extend my contract, I preserved only documentation that I believed might be relevant to establishing the patterns I had observed. Transactions that correlated with alleged incidents and the subsequent management of individuals through financial means. He looked at the jury. I wasn't just a financial manager handling routine transactions. I had unknowingly become the administrator of a system designed to use financial leverage to ensure silence. Then he looked briefly toward the defense table and the financial records. One provided to establish a clear timeline connecting payments to alleged incidents with a systematic approach to creating financial dependence as a means of control. As Winters displayed a comprehensive timeline correlating financial transactions with dates of alleged incidents, Diddy's composed facade finally cracked. Court observers reported that he began whispering urgently to his legal team, his typically controlled expression replaced with visible panic as the financial evidence methodically connected money to motive, means, and opportunity across the entire timeline of allegations. For his final presentation, the judge allowed Winters to provide a comprehensive summary of the financial evidence. He remained seated, his professional demeanor intact as he displayed a series of data visualizations on the courtroom screens. What I've presented today reveals a sophisticated financial system, he began. You built a legitimate business empire alongside a parallel structure designed for a specific purpose. You called it asset protection. You called it privacy management. You called it litigation risk mitigation. But what the evidence demonstrates is a methodical approach to using financial means to control narrative and ensure silence. The defense team huddled in intense consultation. Diddy appeared to be breathing rapidly, his typical composure notably absent as the financial machinery behind his empire was methodically exposed. I've documented the correlation between alleged incidents and subsequent financial activity. I've demonstrated the pattern of initial large payments followed by ongoing financial support, conditional on continued silence. I've shown how the financial structure evolved, specifically to increase distance and deniability while maintaining effective control. These aren't business strategies. They're mechanisms designed with a clear purpose. Then Winters referenced his professional expertise. I've worked with numerous high-net-worth clients throughout my career. The structure I've presented today goes far beyond legitimate wealth management. This was a system designed with control and silence as its primary objectives. Winters addressed the jury directly. If you're considering whether the financial evidence supports the allegations made by other witnesses, the data is unambiguous. The financial flows correlate precisely with the timeline established by testimony. The payment patterns demonstrate both consciousness of the need to silence witnesses and a systematic approach to maintaining that silence through financial means. Then he returned his attention to the court as a whole. The offshore accounts, the shell companies, the elaborate payment pathways. These weren't designed primarily for tax efficiency or legitimate asset protection. They were constructed specifically to distance Mr. Combs from payments while maintaining his control over a system of financial incentives and penalties. He concluded his testimony by displaying a final chart showing the correlation between payment terminations and subsequent legal actions or public statements. When individuals violated what appeared to be non-disclosure terms, their financial support was immediately terminated. In many cases, this was followed by additional management measures, including what internal communications referred to as reputation adjustment expenditures. As Winters completed his presentation, the impact on Diddy was unmistakable. His typically controlled demeanor had given way to visible distress, his hand shaking slightly as he passed urgent notes to his legal team. Because the financial evidence presented through Winters' testimony provided what prosecutors had been building toward: documented proof of a systematic approach to silencing witnesses and concealing evidence. When Winters, but outside the courtroom, the impact was only beginning to register. Financial regulators were undoubtedly reviewing the evidence for potential additional investigations. Legal analysts highlighted the devastating effect of financial records that directly correlated with alleged criminal activity. Industry figures with connections to Diddy issued carefully worded statements expressing shock and concern about the financial revelations. Behind closed doors, financial professionals analyzed the implications of the sophisticated offshore structure that had been exposed. Tax authorities likely began examining potential regulatory violations. And while many attempted to distance themselves from the case, social media was already connecting the financial evidence to the broader pattern of alleged behavior. Previous testimony was being reevaluated in light of the financial timeline Winters had established. Victims whose accounts had been questioned now had corroboration through documented financial transactions. And most significantly, the methodical approach to using money as both carrot and stick meticulously documented by Winters was being recognized as powerful evidence of consciousness of guilt. The public wasn't just shocked by the financial revelations, they were processing a new understanding of how money can be weaponized to silence victims and conceal evidence. that behind the glamorous facade of entertainment success might lie sophisticated financial systems, specifically designed to ensure that certain stories never reach the public. The case against Diddy had transformed from allegations to documented, financial evidence that connected money directly to alleged criminal activity. And as this trial continues to develop, we will bring you the most comprehensive updates available. If you found this report informative, please like and subscribe to our channel, because sometimes the most damning evidence isn't found in dramatic testimony but in the cold, hard numbers that reveal exactly how silence was purchased and maintained. Because the truth often hides in the details. And it was Thomas Winters who brought those details to light. Financial records, when examined by those who understand them, tell stories that words alone cannot. The systematic flow of money through offshore accounts, shell companies, and concealed pathways tells a story of its own. One that doesn't rely on memory or human error. One that doesn't fade over time. It's written in the transfers, the account openings, the carefully timed payments, and the sudden terminations. It's written in the spreadsheets, the contracts, the wire instructions. And Winters wasn't just any accountant, he was the architect, the man who built the system, the man who knew which files to save, which accounts to trace, which payment pathways to follow. He didn't come to court to speculate, he came with hard data, the kind of evidence that doesn't waver under cross-examination, the kind of evidence that draws straight lines from incident to payment, from silence to dependency. And as the courtroom sat in silence, absorbing the weight of his presentation, the realization settled in. This wasn't about isolated mistakes. This wasn't about aggressive financial planning. This was about a system built for control, a system that used wealth not just to protect assets but to purchase silence, a system that relied on the power of money to shape narratives, to prevent stories from surfacing, to ensure that those who knew too much would remain financially dependent. It was a system that didn't need threats. The dependency was the threat. Winters' testimony didn't just reveal financial mismanagement, it revealed financial strategy, one designed to control risk by controlling people. The defense, once confident in the complexity of their financial structures, now scrambled to find a foothold. Their primary strategy, obscure, confuse, and question the reliability of witnesses, crumbled in the face of data, visualizations, and meticulously maintained records. Because the numbers didn't lie. For every alleged incident, there was a payment. For every witness silenced, there was a financial record. For every terminated payment, there was a corresponding public statement or legal development. The pattern was too precise, too consistent to dismiss. It wasn't just the amounts, it was the timing, the sequence, the predictability. It was the system. And that's what prosecutors had been seeking. Not just allegations, but the infrastructure that supported them. The courtroom shifted as the financial records took center stage. This wasn't about celebrity gossip anymore. It wasn't about public perception. It was about accountability. It was about what happens when a financial system is weaponized to control people instead of simply managing wealth. The judge appeared to understand the weight of the evidence. Jurors, some of whom had previously struggled to follow the intricacies of the case, now had a roadmap. The story wasn't fragmented anymore. The financial records connected the dots. Silence had been purchased, and the receipts were now in the public record. What Thomas Winters brought to light changed the case. It changed the stakes. And it changed how similar systems might be viewed in the future. Because if this could happen within one of the most visible entertainment empires in the world, how many others have quietly used financial structures in the same way? How many stories remain untold because the payments were never traced? How many agreements remain sealed, hidden behind complex webs of corporate entities and offshore accounts? And perhaps the most unsettling question, how many people remained silent? Not because they were forced, but because they couldn't afford not to. Thomas Winters walked out of that courthouse, not as a hero, but as a man who chose professional integrity over convenience, over wealth, over loyalty to a system he could no longer support. He knew what stepping forward would cost him. In his industry, discretion is currency, silence is expected. Speaking out is rare and often punished. But Winters made his decision, and in doing so, he illuminated a part of the financial world most people never see. A world where spreadsheets control stories, a world where silence can be bought, a world where the appearance of wealth and success can conceal the machinery of control beneath the surface. As this trial continues to unfold, one thing is clear: the financial story Thomas Winters told will be difficult, if not impossible, to refute. Because unlike memories, unlike rumors, unlike carefully managed public statements, numbers don't forget, numbers don't change, numbers don't lie. And in this case, it's the numbers that may finally tell the truth. If you found this report informative, please take a moment to like this video and subscribe to our channel. We will continue to bring you the most comprehensive updates on this case and others like it. Because sometimes, the most powerful stories are the ones written in the margins. in the fine print, and in the quiet transactions that were never meant to be seen. Thank you for watching.